Yeah, and I think that's a really good point. I mean, to me, I'm always relatively disappointed when I see the big guys listing meme coins. And look, Web3 is permissionless, we're decentralized, everything else, but DeFi solves that problem. And if I'm sitting there with a fiduciary responsibility to both my shareholders, my clients, and my staff, it's as well as investors, it's really hard to say that I can allow my client base to feel like they're investing in a meme coin, which has unlimited, there's no cap, like Doge, like, listen, I'll get hate mail for Doge, but whatever the case is, like the issue is that there's no long-term viability of it. There's no ROI. So unless the entire world says like, look, all the value needs to go into this coin, of which there's a single founder that on his phone can just go ahead and generate as many more of these as he wants. He wants to buy a yacht. He doesn't need to give you any money. He's just going to go ahead and generate more Doge, cash out on the money that's coming in. And that's what the US government does. So I feel like we're impeding on some of their play here. And, the idea that DeFi solves these problems, like if somebody wants to go get into a more volatile asset or go play in that casino, I think there's a time and place for that. And DeFi is maturing extremely fast. We're seeing the cycles come and go. I mean, Aave to me is like, it's as mature as you're going to get in the space, and they're just going to continue to grow and get better and better and better. I mean, you obviously share those feelings, but how do you feel that just kind of the overall asset class should be regulating itself? I hate using outside government regulation, but do you think that there should be kind of a pullback on these, true rug pull coins that do exist?
Yeah, it's hard to speak to them. I mean, where do you draw the line on rug pull? I mean, there's the blatant ones, and then there's the ambiguous ones which haven't lived up to their expectations. So that's tough. I will say on the DeFi side, like there was true product market fit through this cycle from the over collateralized DeFi protocols. There was no cronyism, there was no favoritism, there was no bankruptcy procedure waiting or anything like that. They liquidated or would liquidate anyone who didn't pay back, and it's dumb and smart at the same time because there's no person behind it. So these protocols like Compound and Aave. So Celsius paid back, I think, like you could see on chain some of the paybacks going there. And that's incredible because you know for a fact when you have collateral in DeFi, it's not pledged to multiple sources. That's something that could be done in the CeFi world. If someone pledges the same collateral, say it's a stock, to one party, and then also makes a promise to pledge it to another party fraudulently, you can't get away with that when it's programmatic, when Bitcoin is the asset or Ethereum's the asset. So that was true product market fit. I mean, there's a lot of confidence that grew from the Ethereum DeFi protocols there.
Yeah.